Hi, I'm Jeffrey Roach, Chief Economist for LPL Financial. In this Econ Market Minute, I will give you 3 highlights of the past week, 3 potential market movers for the week ahead, all this in 3 minutes. Let's start with 3 highlights of the past week. First, the Fed chair faced a tough audience at his Wednesday presser. Most notably was his comments that 75 basis points is most likely off the table. The rate decision was unanimous, as James Bullard did not dissent, wanting a higher increase. Powell again highlighted the latest data, which tell us there are twice as many job openings as unemployed, which illustrate the tightness of the labor market. Second, effects from Chinese lockdowns are rippling through global trade. Any potential relief is still unclear as the Chinese government is working through reopening measures. Satellite images of the ports expose the crippling impact of lockdowns on both Chinese businesses and consumers alike. Expect impact to widen around the globe. Third, the economy added 428,000 jobs in April, while the unemployment rate is unchanged at 3.6%. Much to the chagrin of the Fed, the labor market is tight, especially in the construction and leisure and hospitality sectors. As workers chase higher paychecks, the labor market is extremely tight as quit rates are high, revealing that workers in many industries know they can likely get higher wages if they move from one firm to another. These categories may be leading indicators for the overall job market. Now, 3 potential market movers as we preview the week ahead. First, on Tuesday, the National Federation of Independent Businesses give us a snapshot into business optimism across the country. Pay special attention to some of the components like percentage of firms raising worker pay and the percentage of firms having few or 0 qualified applicants for current job openings. Currently, just over half of firms are having difficulty finding qualified workers at all. Second, and likely the emphasis of the week, we will find out on Wednesday if April inflation data cooled a bit from March levels. Official price metrics confirm what we already know, that some items are cheaper now than several weeks ago. Prices at the pump fell from March highs, and used vehicle prices also fell, according to Manheim Auctions. Third, on Friday, we get our first look at current conditions. The University of Michigan will release consumer sentiment based on this current month of May. Watch what consumers expect about their household finances next year. The linchpin of this economic growth path is based on the view that consumers in aggregate can handle inflation pressures and rising borrowing costs. And we get an initial glimpse in the underlying details of this report. See you next time for 3 reviews, 3 previews in 3 minutes.